The things I do for a good comedic intro. So, welcome to this second video on this new channel here. And today is an interesting day in the world of cryptocurrencies. Why is it interesting? Well, glad you asked. Because today is an important meeting of the Fed, the Federal Reserve Bank of America. And they will basically decide if they will soon start tapering bond purchases. And this will have a direct consequence on the strength of the dollar index. So before we start, let's get one thing out of the way. I'm not a financial advisor. Please do your own research and don't do anything based on what I say, okay? You make your own research. I'm just telling you my opinions and what I am doing, but this doesn't mean that I will tell you to do anything. Please always do your own research before investing. Thank you very much. Now that this is out of the way, let's get started. Well, in our last video, we talked about the importance of the dollar index for Bitcoin, and we also found that it's negatively correlated to the dollar. So if the dollar index goes up, Bitcoin goes down on long time frames and vice versa. And we also found that Bitcoin is positively correlated to the stock market. Now the Fed meeting today is so important because it will decide the direction of the dollar index for the coming weeks, if not months. So let's have a look at the dollar index on the daily time frame. This means the width of one bar in this candlestick chart is 1 day. We see that the dollar index is printing an interesting structure. This is called a megaphone structure. A megaphone structure means that the price is bouncing in an area which is widening more and more. It's a widening structure. So we can see that it's doing a kind of a megaphone structure in here. And normally a megaphone structure either breaks out to the upside or to the downside. And this is why the Fed meeting today is so important, because it will decide basically the direction of the dollar for the next weeks and months. If the Fed will decide to be hawkish, that means they will taper the bond purchases and in the future increase the interest rates. That means the dollar will rise in value. If, however, they will decide to be dovish, which means that they will continue with quantitative easing and also at the same time not cut back bond purchases, and also they will not raise interest rates anytime soon, that means that the dollar will go down. This is in line with our structure that we find here. Now we can see an interesting pattern. We can see a bearish divergence in the daily chart. So this means that the price is kind of rising, so we have higher highs and higher lows, yet at the same time the RSI, the relative strength index, is making lower highs and lower lows. We can see that it is going down. This is a bearish divergence. So there is a higher likelihood that the dollar index will at some point break down and dump. However, we also found that on the weekly time frame, the dollar looks short term kind of bullish. So this could mean that first in the next weeks it will pump, which would speak for that the Fed will go with the tapering, but at some point will reconsider. So how could such a scenario look? Well, so in the weekly dollar chart, we can see that here and here we have lower lows. And here basically we have a double bottom, whereas the RSI here has higher lows and here also. This is called a bullish divergence. So there's a high likelihood that this structure we talked about, this megaphone structure, will break up to the upside. And the target would be around 97.7 something for the dollar index. Now I assume that this will happen and that afterwards the dollar index will brutally dump. Now why is that? Well, because on longer time frames in the monthly dollar chart, we also have a very strong bearish divergence. So we can see in the monthly chart that the dollar is rising, so it's having higher highs, but at the same time the RSI is falling, so it has lower highs. So this is a very strong bearish divergence in the monthly time frame. That's why I assume that first we will see the dollar pump, make a fake pump to 97 as we said, and then it will brutally dump. Now what does that mean for Bitcoin? Because we are all here for Bitcoin and the crypto market, right? Now last time I was mentioning that there is a very strong bearish divergence on the daily time frame for Bitcoin. What does that mean? That means that the prices are rising, higher highs in the price chart, but we have lower highs in the RSI, the relative strength index. And this is called a bearish divergence. And I was predicting that we would go down and see a dump to the $37,000 level. How did I get to the $37,000 number? Well, pretty simple. I made the Fibonacci retracement of this entire price move from 65,000 down to the very low of 28,000, which we had on the 22nd of June 2021. So we see that it basically bounces around this also very important 0.382 support level at $42,524. But I think because it broke here that we will go down lower. This means the $37,000 level. So we might see something like this here. Okay. But now, if a worst case scenario happens for us and the Fed basically will taper their bond purchase, so they will announce that they will be hawkish, and at the same time this situation in China is unraveling in a very negative way, maybe you heard about it, the biggest real estate developer in China, Evergrande, is basically bankrupt and it has to be bailed out by the Chinese government. If they don't bail it out, this could have a gigantic ripple effect for the whole world economy, quite similar to what happened in 2008 with Lehman Brothers. If that would happen, we would see a brutal stock market crash. And as we found in the last video, Bitcoin is strongly correlated, positively correlated to the stock market. So if the stock market goes down, it will drag Bitcoin down also. So in this worst case scenario, the $37,000 level might not hold at all, and Bitcoin might actually bounce a bit here at the $37,000 level, but then fall right through. There's another support level, of course, where the previous low was, but if this level doesn't hold and we go down further south, because the stock market will drop even more because of the whole global situation, then it could indeed drag down Bitcoin as low as $20,000. What? God, no! I'm poor again! Help! But don't worry, even in such a worst case scenario, and we are talking really worst case scenarios here, Bitcoin will not be doomed. I will show you why. Let's look at the Brave New Coin Liquid Index for Bitcoin. This is basically a long-term chart of what Bitcoin was doing since it came onto the market and started trading back in 2010. Here we have the weekly chart. Let's activate the long-term trend channel, which I showed you last time. And what we can see here is that Bitcoin is really respecting this long-term channel here. It's always bouncing between the highs and the lows, with, of course, the exception of this black swan event that was the COVID crash in early 2020. Now let's add a very, very important indicator, which is a moving average, namely the moving average with a length of 200 in the weekly chart. This means that this is the average price over the last 200 weeks. That's why it's called MA200, moving average 200. Now you can see that the moving average over the last 200 weeks is really nicely following our trend channel here. And it has been touched a few times. It was touched as a support in January 2015, then again in September 2015, then again in December 2018, and then during the COVID crash in April 2020. In a worst case scenario, if things unfold as I said, like and remember, we are talking super worst case here. We are talking the Fed is hawkish, and at the same time this Evergrande crisis in China is widening and dragging the whole global stock market down. Now if that happens, how low can Bitcoin go? And I will show you now that the worst thing that can happen, it can go down to around 17,000. This is the weekly moving average 200. And if we just draw the future MA200, how it would continue to rise, we can see that it will be probably around 17,000 in a few weeks. So if the worst case scenario happens and we get a situation akin to the COVID crash, where it really dropped from around 10,000 to 4,000, 3,900, we could see something similar unfold, and it drops now from 40,000 to 17,000. However, this support level is extremely strong and it will hold because historically it has always held as the strongest support level for Bitcoin. This, of course, in turn will mean that it will drag down the whole crypto market with it. All coins will tank, no matter if Ethereum, Ripple, ADA, you name it. All coins will be dragged down like crazy. However, you don't have to despair because this will be a perfect entry point. Should something like this happen, you can have a perfect entry into the market because it's pretty clear that afterwards we will see a very strong rebound, probably some sideways movement, and then we can resume our climb. And in this case, I assume we will see the final push towards 230,000 by early 2023 or late 2022. So no matter now if Bitcoin drops to the 20,000 level or not, this will not have big implications long term because we are in this market long term. If we want to be successful in the crypto market, it's super important that we think long term, okay? It's not like what will happen this week or next week. No, it doesn't matter what will happen this week or next week in the grand scheme of things, because we are here for the long run, and this is the only way how you can be successful in the crypto market. I will make a separate video on how you can be successful in the crypto market and what mistakes to avoid and what strategies to follow. But in order to be successful, you have to be super patient, like you have to be in for the long run. You have to think in the time frame of years, not weeks or months. And you have to be immune to these price fluctuations, okay? You have to say the crypto market is a volatile market. It can go up insanely or down insanely. Crazy stuff can happen. We have insane volatility. It can even drop to 20,000 or 17,000 as we saw, but it can rebound sharply, the same as what happened here during the COVID crisis. It dropped down from 11,000 almost, like 10,500 to 3,900. That's crazy, okay, in the time frame of a few weeks only. And then it rebounded and started climbing shortly afterwards to 65,000. Imagine that. So something similar could happen in a worst case scenario now. However, even that would not change the long-term picture, because in the long-term picture, the dollar index, as we saw, will drop because it made this huge bearish divergence in the long-term monthly chart and a Wyckoff distribution pattern. We talked about it also last time. So long term, the dollar will fall. This means that Bitcoin will recover and will be driven up to new highs. And these highs could be as high as 230,000 according to our long-term chart here by late 2022 or early 2023. Now let's look at the long-term monthly chart in Bitcoin, and we can see that everything is looking extremely good. You know, this whole drop here, like this whole thing that happened the last months, it looks quite insignificant in the grand scheme of things, but people are always freaking out, you know? Why? Because everyone tends to think short term, because this feels so brutal emotionally. You watch the charts like, oh God, no, it dropped, it's going down, it dropped by 5%, 10%. This feels brutal right now, but in the grand scheme of things, look how insignificant this actually is. Look at the long-term chart. We can see the bear markets, yes. We can see like this bear market here. We can see this bear market here. We can see this one here, this bear market. However, this one here is actually not really pronounced. However, people are still freaking out. But in the grand scheme of things, this doesn't even look too important, because it can just rebound and then afterwards have an insane rally to 220,000, the same way it happened with the COVID crisis. So what I want to say with this video is, even should the worst case happen, and I'm not saying it will happen, I'm just showing you possibilities here, even should it happen, it will not have a big influence on the long-term price action of Bitcoin and the entire crypto market. Now in the next weeks I will also be talking about the different altcoins. However, should Bitcoin now fall to 20,000, it will drag of course down the whole market, and we have to always keep probabilities in mind and act accordingly. And basically I'm telling you now, it could drop to 17,000, it's not excluded, if a worst case global stock market situation unravels, but I'm not saying that this will happen. So always please keep that in mind when I'm doing these videos, right? In another scenario that is not so unlikely, the Fed will announce that it will not start tapering anytime soon and postpone the whole thing, because it doesn't want to risk the stock market crashing, especially not with the weak job numbers in the USA and not with this global potential financial crash situation unfolding from China. So if that happens, we have our Fibonacci support levels that we drew before. If that happens, it could indeed be that we get lucky. We go down to 37,000 just to have a nice flash crash. And then if we are lucky, it starts rising immediately and we could see a resuming of the rally until the end of the year. So in one scenario, it could also be that we will have a rally towards the end of the year, the classic 4-year cycle, because we cannot be sure yet if the cycle will always be 4 years or if it will lengthen. We don't have enough data points long term, because we just didn't have so many rallies yet. Basically, we had one rally in the beginning. This was because Bitcoin came fresh onto the market. It was like an immediate bull market with a duration of 308 days. And then from the first peak to the second peak, it took like about 900 days. And then from the peak of the second bull market to the peak of the third bull market, it took already 1,470 days. And you see that every time the duration is different. Is it really that the cycle duration is 4 years? Is it really fixed or is it getting longer? We don't know yet. We don't have enough data points. It could be now that the cycles are staying at 4 years, but it could also be that the cycle duration is increasing. And if it would increase, then this means that we would have likely a top in early 2023. And in between, I told you it can go down, it can go up, it can wobble around, and we can go to 230,000 by late 2022 or early 2023. However, if the cycle duration now turns out to remain fixed at 4 years, then of course we would have the classical 4-year cycle and a top in late 2021. So we would basically make a turnaround now, bounce at around the $37,000 levels, and bam, up we go until the end of the year, until we peak around 150,000 or 140,000 plus minus. This could also happen, okay? This depends very strongly on world events right now. It could happen that we have a rally until the end of the year and peak at 140,000, but in an extreme case, we could go as low as 17,000, which is just crazy, and we still will rebound and see new all-time highs some point in late 2022 or early 2023. That is the beauty of Bitcoin and the crypto market. It can go down brutally and still recover and go up in ways you wouldn't even expect it. Yes, okay, Sebastian, but what should I do now? Please give me some advice. Okay, first of all, I don't want to give you real advice. I'm just telling you what I would do. On the long-term chart, a good entry point is always if we are below the half point here in this long-term chart, the half line, and make the middle line more visible. So if we are below this middle line here in the long-term chart, this means it's normally a good time to buy. And if we are above this middle line, it's normally a good time to sell. So one strategy would, for example, be to already start buying a bit right now. And if it drops lower, then buy more. And if it drops even lower, buy more. Because we have to be patient and always keep in mind that we are here for the long run, okay? I know it's something no one wants to hear. People want to get rich quick. People want to have Lambo next week and Moon next week. But unfortunately, this is not how this market works. You have to be brutally patient, brutally disciplined, and be able to stomach a lot of pain and a lot of disappointments and a lot of brutal price action to absolutely not your liking, which goes into the wrong direction. So you have to like develop a kind of a relaxed attitude to things that happen in the market and just like, okay, whatever, you know, like whatever, in 1 or 2 years I know it will be higher. So do not despair, because long term the future is looking very bright for the crypto market. That being said, I wish you a nice day, have fun, and see you next time.